Good evening friends, this side Rahul Magan and today is 29th December 2019. Practically we are 3 days away from 2020 and as a company we are 2 days away from filing of the bank license in Singapore. But today we are going to be discussing a very important topic and which actually interlink two other topics. So there are three different reports that came in the public domain about the financial markets pertaining to India in the last week. The first report came about the financial stability review conducted by Reserve Bank of India. And I, on an individual ground, strongly believe that financial stability review conducted by Reserve Bank of India is absolutely incorrect, because it do not cover lot of the factors that it's supposed to cover. So henceforth I am completely against that stability review, to be honest, and that is my personal thinking, my personal viewpoint. Now what I have three different cuttings of three different newspapers, and what I did, I divide this cutting into three different parts, because I always have a habit that I always link the things, because what our media always do, our media is always busy presenting things in a standalone matter, and more importantly, most of the things actually they do not present. Like, I don't know how many of you visited the RBI website and you read the financial stability review. The crux of that financial stability review is not presented by the media of India. Because media knows very well that out of 135 crore people, there would be hardly 50 or 60 people, those who go to RBI website and download this report and they will read this report. Basically, they will have a bird eye view of this report. But people like us, irrespective of the busy schedule, and especially at 2 a.m. in the morning, we are shooting this video because we went there and we saw a lot of stuff. Of course, the detailed video would come soon, but here we are linking three things. From the last one and a half year, we are continuously saying on our YouTube channel that India as a country, no politics apart, no politics, but facing a deep liquidity issue. India is facing a deep liquidity issue. That is the reason that government of the country wanted to do whatever means, whatever it takes, but they want the liquidity. In fact, I am not sure, but government is very far away from disinvestment target. They are doing disinvestment of the profitable companies only because they don't have the liquidity. And today the height of stupidity came when Reserve Bank of India governor, I doubt whether he understands the difference between forward contract and option contract. I'm sure about it. That person came in the public domain and said that the banks would be more resilient even though the gross NPA would be rise from 9.3% as of September 2019 versus projected 9.9%, which is practically 10% as at September 2020. First of all, I would like to ask from this gentleman that what do you mean by 9.9%? Why don't you make it 10%? So it is just like a t-shirt shop. You go and buy a t-shirt and what they say, this t-shirt costing $8.99. Come on. You make it 900. Why 8.99? So why 9.9%? Nonetheless, my first question to Reserve Bank of India governor is that you yourself said that State Bank of India, Punjab National Bank, UCO Bank, Union Bank, Yes Bank, Axis Bank, ICICI Bank, everyone in India is doing the underreporting of gross non-performing asset, and also not only gross non-performing asset but also the provisioning part of it. The question is that how can we assume that the total gross non-performing asset which you are giving in your financial stability review is absolutely correct? I have no trust. Maybe you do have the trust, because RBI himself said that SBI is doing under provisioning by not less than 12 crore or 120 crore, by 12,000 crores. And if and most important question will come, it is not SBI, it is everybody who is doing. So this raises three important questions, and at least I don't have an answer today. Maybe you would have an answer today. Question number one, Is this restatement amount provided by RBI, is it correct or it is manipulative? You know my answer. Question number 2. What is the time frame provided by the regulator to these banks for reinstatement? Remember, whenever any bank fined heavily or whatever by Federal Reserve after 2008 financial scandal, Federal Reserve forced that bank to do the reinstatement of financial statement. But the biggest question is that the reinstatement of that financial statement is never been mentioned in any of our media reports. Because our media is definitely not worried about the restatement, they are more worried about making money. That is. So RBI himself in the whole financial stability review not mentioned about if SBI has underreported the non-performing asset to the tune of 12,000 crore as and when they are going to restate that. And when the restatement financial statement would available in the public domain. Question number 3. Is that underreporting of gross non-performing asset is happening from this year or it is happening since inception? I am 500% sure that India overall is a country which is known for non-performing asset. And today when I was reading newspaper, whatever I busy, I always read newspaper. Today when I reading newspaper, I got to know that Suzlon is having about approximately 11,300 crores worth of debt they have taken from Indian banks. So he has taken the lending of basically the borrowing of around 11,300 crores from Indian banks. And as per the RBI guidelines, in this March quarter, which is upcoming quarter, March 2020, the banks needs to maintain the provisioning of the debt. Now, moral of the story is very clear. Is that the banks which are already reeling under a lot of crisis, those who are already underreporting the gross NPAs, additional 12,000 crores worth of gross non-performing asset, roughly 11,300 would come and they need to make a provisioning for that, which would dent their balance sheet a lot. So all those Einstein, Edisons and Neutron, or maybe all three together, thinking that the worst is over for Indian banking, let me tell them the worst is yet to start for Indian banking. Worst has not yet started, because what you look now is actually a trailer. It is not more than that. The big picture is yet to come. Now in this video, we also need to link the insolvency and bankruptcy code, because without resolving that insolvency and bankruptcy code, I cannot explain. So I go this 1, 2 and 3. This is my last. Ultimate objective is to reach there. But like I said, like the Einstein said, the great scientist, that everything is connected with each other, you just need to connect the dots. Similarly, when I say I just need to connect the dots, I need finally to reach here, I need to start from here. This suggests that bank loans bought by ARC, asset reconstruction companies, rises by 17.4%. I doubt any employee salary in currently is rising by 17%, but the bad loans in India risen by 17.4%. So this gives me figure that, the book value of the loans which acquired in June 2016, it was 2,37,000 crores. In June 2017, it grew to what? 2,62,000, then 3,30,000 and then 3,88,000. Congratulations. So in June 2016, it is 2,37,000 crores. Next year, 2017, it is 2,62,000 crores. Then 3,30,000 and then 3,88,000 crores. Many congratulations. If I just compute that the average piece averagely there is an increase in the book value of the asset acquired by asset reconstruction companies is approximately 51,000 crores on an average note. The security received, I don't know how much you understand about security received. In June 2016, it was 79,000 crores, and in June 2019, it grew to roughly 1,46,000 crores. it means approximately 100% increase. So we are at a situation when if I add both, which is the loan plus the security received, it tantamounts to 73,000 crores. It means the bad loans in the country are growing in the books of ARC by 73,000 crores. 73,000 crores. Boss, do you know the Indian government is having a disinvestment budget for the year is 1 lakh crores. So it is approximately 73% of the disinvestment budget. What I mean to say, if you know financial market correctly, is that the total bad loans which is coming in the books of ARC, asset reconstruction companies, is 73% of the disinvestment target made by our government in 1 year. Now you understand situation is worst. I don't have any lexical. Lexical stands for dictionary. It is more than worst or it is okay. For me, it is worst, more than worst, or maybe if I have any other word, because dictionary do not suggest me that way. This deteriorates the liquidity situation in the country. There is no doubt about that. Even a BCom honors can explain that this deteriorates the liquidity position in the country, because banks who is continuously lending money and they are getting bad loans, and we also know that insolvency and the only success for insolvency and bankruptcy court, that too after 2 years of hard fighting, is the SR Steel case by ArcelorMittal and Nippon Steel jointly. This is the only success they have. Apart from that, several thousand cases are pending and God knows what would happen. We really do not know. So according to me, by June 20, this will rise further. That's for sure. Now here comes the NBFC. RBI published a report. RBI reports on trends and progress in banking suggests that the proportional of doubtful asset shows a marginal increase from 2% to 2.3%. RBI also said that the non-banking financial corporation companies will continue to their quality will deteriorate. The report suggests that lending activities by non-banking financial companies, NDSI and HFC housing finance companies have somewhat moderated while their loan provisions remain at comfortable level. The report said total NBFC credit grew to 18%, which is approximately 23.54 trillion versus the last year of 22.76. But there is a catch. The catch is in the last paragraph. NBFC continue to rely on bank borrowing. While finding it difficult to raise money through debentures, the share of bank borrowing increased from 21% to 27% this year. Just use your mathematics. In business school examination, there is a test called, the data comprehension test. Just have a cool mind and think. Non-banking financial corporation is having total credit of 23.54 trillion rupees. Now, from where the non-banking financial corporation will get the money? They get the money either from the public, or they get the money as a deposit, or they get the money from the banks. Public oblique deposit from the banks, or maybe they can raise the debentures or non-convertible debentures, it depends. We know the situation of non-convertible debentures in India. After every week there is a non-convertible debentures which is due and people don't have the money. The latest example is the Lodha Group, whereby around $325 million worth of non-convertible debenture is pending. They don't have the money. They are looking for overseas funding and they can go to any level for that. We know about that. Now the question is, they completely dependent upon banks. So last year they borrowed roughly 21.7% of what? $22.76 trillion. So last year their total funding was 22.76 trillion, and out of which roughly 5 trillion, $4.9 trillion, 4,90,000 crore they borrowed from banks. Now this time they borrowed 6.4. It means there is an increment of 1.5 trillion. Just use your mind. The last year credit given by NBFC 22 trillion, this year is 23. So the total increment of closer to 1 trillion. In the last year, the total bank borrowing was 4.9. This time it is 6.4. The total difference is 1.5. Is that clear? It means that the dependence on the bank borrowing by the non-banking financial corporation is growing even greater than the difference between the funding they are giving in the market. But is that level of analysis is given in the RBI Financial Stability Review? Never. This whole paragraph only gives me number, and whatever I told you is I interpreted once I read this from that previous to this video. Now the final C. Since we do not have liquidity in the market, and we have already reported that many gold financing companies, without quoting the name, they are raising the overseas market. Recently, the Future Group, the multiple companies are raising from the overseas market. Now this suggests that fund raised via dollar bonds at 6-year high. So having said that, in 2015, the total fund we raised from the companies raised from I would say from overseas market is approximately 15 billion. Now this time in 2016 is more or less flat. In 2017 it grew to roughly 21 something billion. 2018 it fell down to 10 billion, and 2019 it is 21 billion. Choice is yours. That in 2019, which is not yet completed, the number is December 2017. The total foreign funding raised by 47 Indian firms is 21.32 billion. And few idiots, those who working in a bank like Sunil Khetan, Indian head Global Financial Market Bank of America, is giving a factor which is attractive yield. Looks like Sunil Khetan never looked at the Thomson Reuters and the Bloomberg terminals, so his knowledge in the Thomson Reuters and Bloomberg is poor. I would like to let Sunil Khetan know that the media is paid, but I am not paid. If you take the funding, I'm damn sure 99% of the people, those who are watching this video, in fact never saw the IRS curves in India, interest rate swap curves in India. My dear friends, today if you take funding outside India, then I agree IRS curve is little bit flat, but QST, quality spread differential component, is growing like this. Guys, do you read that? The CVA component of the Indian players, once they raise outside in the market from outside India, is growing like this. So the net rate which you pay is the IRS plus the CVA, interest rate swap plus the CVA. And if any idiot like Sunil Khetan, who heads the Global Capital Market Bank of America, feeling that they are only taking because of the US yield, then he needs to learn that they are forced to take the money, even though once you take the money from outside India in dollar terms, and remember, majority of these companies are taking money, their functional currency is in INR, while the funding they are taking in dollar terms. And I'm again sure most of the people, those who watching this video, do not know that LIBOR is 6 months quoted, and once you take the funding in such stressful situations, the lender will force you to do the revolver at 3 months. So once the condition is good, so let me take a simple example. We have two companies, Apple India and say Lodha Group. If Apple India take the funding outside India in dollar terms, for a minute I assume Apple US is not a rich company, for a minute just an example, then they would be forced, they would be doing 6 months rollover. Lender will not push them for a 3 months rollover. If they wish, they can do so. But this will add a cost to in their books, which is known as ICAP. So they would be paying ICAP, that is. But the question is, if companies like Lanco, Suzlon, Loda all come in the international market and raise the funding, he will force that borrower to go for 3 months. And once again, this time the another issue is the CVA. So credit valuation adjustment, according to me, in case of Lodha Group, for a while, for a minute, I assume they get $325 million from international market. That would not be less than 2%. So Sunil Khaitan and this media need to learn that the dollar funding which you are raising outside India is now more costlier than what it was, even though the IRS curve is flat. To cut the long discussion short, the failure of insolvency and bankruptcy code in India add up to a huge bad loss in the books of asset reconstruction companies. This data clearly suggests that if I only talk about the book value of the asset, I don't have the data about the dirty value. The book value of the asset grew from 2,37,000 crore to 3,88,000 crore. And the security receipt grew from 79,000 crores to 1,46,000 crore. If I add A plus B, then of June and minus with A plus B of June 19, I would get a difference of roughly 73,000 crores on a yearly note, which is 73% of the disinvestment budget made by Government of India only for this fiscal year. So you can very well estimate the gravity of the situation. Except SR Steel, there is not any big success story we have about insolvency and bankruptcy code. Interpretations are an issue, and more importantly, there are a lot of, even that SR Steel case, it took around 2 years to get this resolved. On paper, the moratorium period is just 330 days. If I look this, the Financial Stability Review of Reserve Bank of India himself said that the NBFC reliant on the banking sector is very high, and even though the unconfirmed report also suggests that the non-banking financial corporation now looking to tap outside Indian market because the liquidity is dried in India. RBI himself acknowledged in his Financial Stability Review that the gross non-performing asset for the year ended basically for the month ended September 2019 is 9.3%, which will grow to 9.9% in 2020. God knows what is the meaning of 9.9%, why not 10%? Anyways, no explanation on this. If I include all this, then the Indian companies are forced to go outside India because there is no domestic liquidity which is left. Many idiots like Sunil Khaitan feels that sitting in Bank of America, this is because of the attractive yield. No, it is because that Indian firms are forced to go outside India. So the QST, which is quality spread differential curve, the CVA component, which is credit valuation adjustment curve, would be very high for Indian company. For a minute, I agree with the banks that the interest rate swap curve, IRS curve for INR IRS curve is flat now, so as OIS curve, but the CVA component of QSD is very high. If I add the hedging cost in that, then I need to add the ICAP, which is the rollover adjustment, and everything. This will end up having a huge price for the Indian. And do not forget that they still need to get this revalued. They still need to, because many of the Indian companies only take COS, coupon only swap. Most of the companies do not take POS, principal only swap, because people don't know. Out of this 47 firm, we helped 2 firms to get the dollar funding, and when I talked with their treasury department, they were not capable enough even to make me clear that what is POS, principal only swap, and COS, coupon only swap. So to cut the long discussion short, a big disaster is set to happen in 2020. I call this nuclear bomb, because this disaster will balloon the balance sheet of Indian companies, just like in 2008, when none of the Indian companies expected that rupee to touch 50 from the current level of 37-38, but it happened. It happened. Now, when it touched 50, many intelligent bankers came in public domain and said that 50 is transitional. Is it transitional now? Today you're sitting at 71.38. Indian rupee to dollar. $1 is 71.38. Considering all, a big collapse is going to happen in the Indian banking books, and I doubt RBI can do anything because RBI do not have a firepower left. The mistake they committed, and this anyways $21 billion add to the net investment, that net international investment, net IIP net IIP of Reserve Bank of India, international investment position of Reserve Bank of India. With this, we thank you very much. For me, the scene is definitely not rosy. There are a lot of issues which India is facing on a financial front, and the balance sheet impact would be very deep in 2020. We need to see this seriously, but let's see how the things will move. As of now, they are not rosy. With this, we thank you very much. You are most welcome. If you feel that you are a person of competence, you are a person who wanted to deliver something different, we have a WhatsApp groups for you. You can join that. Apparently, Treasury Consulting already started uploading derivative contracts on Amazon. You simply open amazon.com and type my name Rahul Magan. You're able to buy the derivative contracts. Today, more than 7+ derivative contracts are live on Amazon. We expect it to touch 100+ by June, and whereby we would hold a very high scale derivative desk on Amazon. And don't forget, in Q1, multiple new products. So within this year, 2020, Treasury Consulting would be launching not less than 26 products apart from our banking license in Singapore. With this, we thank you very much and talk soon.